Hello, hey Sadia, how you doing? Thanks for joining early. Hey Stanford, how you doing? Can you guys hear me loud and clear? I guess you can because you just said, hey Jin. Hey Jamilu, how you doing? Welcome. Thank you all. I see a lot of you joined early, so thank you all for joining early. We'll give it a minute or two before we get going. Hey Alan. Alright, we'll give it a minute or two while everyone else turns up and then we'll get started. And in the meantime, as you are watching and as we are giving that minute or two, smash that like button, make sure you click subscribe, make sure you click like. I want to see how many likes can we get onto this session. Alright, it is a special session today because we're doing it a little bit differently. I will tell you more about that shortly. Hey Tofag. Sorry, I got your name wrong there. Sam from Australia, how are you doing? Hey Julio, doing great. Markets have been a little bit quiet today, but over the last couple of days we've seen it move quite nicely, so doing well. How have you guys been trading? I hope you've been trading well. Hey Diana. Alright, one more minute and we shall get started. Today we are going through the live market analysis. Diana, alright. Hey Tuan, how are you doing? Good job. And again, as I would like to do, I think you all know my habits already. While we're getting started, put it into the chat. Let me know where are you joining us from. I love to know. I know one person from Australia already. So let me know where you're joining us from. That would be, hey, Tuan, Perth. Fantastic. That's where I was from. All right. Good stuff. All right. So let's get started now. The IC Markets webinar doing the live market analysis today on the 24th of August. We're going to be doing it a little bit differently today. I'll tell you why. But before all that, first things first, a quick disclaimer. All right. Any information contained in this webinar should not be construed as advice and is presented as educational material only. International capital markets, IC markets, has not considered your objectives, financial situation, needs, and you should consider its appropriateness for your circumstances. Alright, why I say that, or why we say that, is because we will be looking at the news, we will be looking at charts, we'll be identifying possible some trade ideas based on my opinion, based on our views. So if you are going to be jumping to any trades, make sure you do your due diligence. Make sure you check your charts, check your trade size. Don't overtrade, don't over leverage on your trades, because that's the one thing that's going to cause the biggest pain to your trading account, right? So make sure you do your own due diligence before you jump into any trades. Right, yeah, so Desmond's burning the candle on both ends is a bit busy. So that's why we're here. The team is here to help you with your trading journey. So hey Stephanie, thanks for that, Sadia. Alright, so as we're going through this, just a quick introduction of the team, of a couple hosts that we're running today. So myself, I'm Jin, or everyone calls me Jin. My name is Jin Dao. One of the investment analysts here at the Everest Fortune Group. Alright, we have won several awards on our technical analysis, on best FX and equity research. In my role, I have also managed a multi-million-dollar fund, and now I'm doing this together with Everest Fortune Group, doing analysis, doing research, helping you with your trading journey. So that's one reason why I'm here. Please keep the questions coming. If you have any questions, have any thoughts, would like us to look into any charts or trades, feel free to share it. I'll be happy to give you my view on the markets, give you my view on a possible trade, and then we will see how we take it from there. Alright, as I told you, today we will be doing it a little bit differently because I won't be running the whole session alone. I do have a very More shopping money, yes. I do have a very good, capable partner with me. We have Jianing, who will be joining the second part of this session. She's also an investment analyst here at the Everest Fortune Group. She's recently graduated from the ESSEC Business School in the Masters of Finance. So you can always, ping her for more questions about her views of the market as well. Right? So the team is here. We're ready to help you. Make sure you keep the questions coming. Let's keep this interactive. Let's take this to the next level. All right. The sound is distorting. Okay. How about that now, Fabio? We've just moved the mic a little bit. I think I might stop moving around too much. I tend to bounce around. I hope that's better, Fabio. Let me know. Right. Diana says pound dollar, so I'll get to that as the first part. Could you suggest any websites to learn trading and be a pro like me? Well, I'm not really, I wouldn't call myself a pro yet, right? It's all about a long-term journey. So we're all part of this journey. You could check out, a lot of websites to learn how to trade. My personal view is that it's not so much about reading different websites, right? It's about watching the charts, getting the experience, right? So a lot of times I see retail traders spend a lot of effort trying to learn new strategies, learn new methods. Nothing replaces the experience you get watching the charts, reading the news, getting that experience. So that's my view. I would say pick one strategy, pick one method, test it out. If it sounds good, if it looks good, and if it fits your trading characteristics, then take that, test it, apply it, whether it's on a demo, whether it's on a small live account or a big live account, keep to it, and that experience is going to be more helpful than anything else. All right. Thank you, Sadia. I do love my fundamentals. A bit of a nerd on that end as well. All right. It is raining a little bit here, Fabio, so we might hear that tickering of the rain on the windows. So that might be one of the reasons why we have a bit of a noisy back. All right. So let's get straight into it. Take that away. Looking straight into the charts. And as Diana did request, we are looking first at the pound dollar. So it's almost like you knew my charts already. Okay, so let me just take that away. Before I get into the charts, right, how I think about trades or how I approach my trades, first things I do, I always look at the fundamentals. Right, I always look at economics first. And I head onto Forex Factory. I check out the economic data to try and find what's likely to happen or what should happen before I look into the charts to tell me whether it's the right time and whether I should be jumping into a trade. Not a lot of news today, but if you paid attention to yesterday, we did have a whole bunch of PMI numbers being released from the Eurozone, right? French services PMI, manufacturing PMI, German, and the Eurozone as a whole. Manufacturing PMI actually did increase a little bit than expected, right? So it was a 49.8. They expected at 48.9. Expected a bigger drop. It came out at 49.7. So still in that contractionary phase, but a little bit better than expected. Pound, the UK manufacturing PMI didn't do as well. Was a 52.1. Expected a 51. Came out at a 46. So it went from a expansionary phase to a contractionary phase. That's one reason why we saw the pound dollar drop and possibly continue to drop despite services PMI climbing back up, but still less than previous of 52.6. The main thing that happened was last night we saw the US flash services PMI was a 47.3, expected to climb slightly to a 49.8, but it dropped to a 44.1. So massive contraction in the services sector for the US. Manufacturing PMI as well did drop from a 52.2 to a 51.3. bordering on that contractionary phase already. That's put together. That's why we actually saw on the dollar index that move, right? This is on the H1 time frame. We saw the dollar index drop from that 109 level straight down within an hour towards 108.37, and then finally tested at 108.10 before bouncing back up again. Right now, the dollar index trading at 108.62. All right. So that's why, if anyone was wondering, that's why we saw that drop in the dollar index. PMI numbers for the US, not fantastic. Actually, was a lot worse than expected. So with that, I will look into the pound dollar. Gold, I'll leave it to Yazuru. I'll leave gold for Jianing. She's earmarked that. She's got some things to share with you about that. So I'll leave that for later. And good. No more questions? All right. Before I get into the charts again, one thing to pay attention to. It has been a little bit quiet today. Not a lot of news, but watch out, right? Watch out, because tomorrow on Thursday, we do have the US GDP data to be released. Quarter on quarter GDP was a minus 0.9%, expected to be a minus 0.7%. And if you saw the previous data, it was a minus 1.5. Now, looking at a minus 0.9, we're looking at consecutive negative months, right? So negative quarters. And given that we're looking at consecutive negative quarters of GDP, it again signals that the US is entering or is risking a recession, right? Negative GDP on a quarter-to-quarter basis signals a possible recession in the US, despite the data is showing that, despite the FOMC, the Federal Reserve, indicating that, hey, the US is not in a recession. Okay, so that's going to be important. And then on Friday starts the Jackson Hole Symposium. Do you know what the Jackson Hole Symposium is? Put it into the chat. All right, I will look at US 30 as well. I just did DXY. I can do a quick recap again if you would like. So do you know what the Jackson Hole Symposium is? All right, so that's where we have most of the major central bankers coming together to discuss, so attended by central bankers, finance ministers, to discuss about the world policy, right? Economic policies there. So this is going to be a big news event, because we're likely to see Jerome Powell from the Fed Reserve possibly take quite a hawkish stance during the Jackson Hole event. So if he does come out and revise his views or try and pivot market expectations to be a more hawkish, we're going to see that US dollar possibly climb and break above that 109 level. So I just answered your question there again, Julian. With the dollar index, with the Jackson Hole Symposium coming out, high volatility situation on a Friday and Saturday and Sunday, we could see on Friday and on Monday, a high volatility situation. Hey Kelvin, how are you doing? Right, which means that I'm looking here at the dollar index on H4 time frame. It could sit there for today, 108.62, possibly bounce around a little bit, but the key level here is at 109.21. I'm looking for that to break towards upside if we see a hawkish Fed. Right, if we see a hawkish Fed, we could see the DXY break above 109.21. How high up can it go? To the daily time frame, zoomed out all the way. No, actually to the weekly time frame, zoomed out all the way. You can see that the last time we broke above that 109.21 level, or we came close to that level, was back in July 2002. right? 2002. So 20 years ago was when we saw this level. If we do break above, I wouldn't start drawing lines across at this point. What I would do is look for the next round number levels. So for sure, we'll be looking at 110, right? I would identify 109.50 as a possible level again. So I'm looking for price or for the DXY to rise because of the Jackson Hole if they're hawkish, and to rise towards 109.50. If it breaks above 109.50, then we could see 110. Because it's such a long time ago, I don't like drawing lines all the way back. I'll start looking for round number levels instead. All right. Yes, if the dollar does get stronger, we could actually see the equity markets take a little bit of a beating towards the downside. All right. So with that, as promised, let's get to the pound dollar. Pound dollar right now at 1.1805 or 1.18 looks like it's tracking towards the downside. I was just doing an analysis on this, was just about to share it before this call. Let me see how I'll do this. There is a bit of a down line there. Let me change this line a little bit. Okay, you can see that downward trend line pushing this towards the downside. Seems to be resisting the upward move. Pushing price lower. Okay, so if I extended this all the way down and then I put in a horizontal support level here, because it's where it hit and bounced off from at that 1.1763 level. Basically, what I'll be looking for is if price can track lower and break below this support level, right? If it does that, then I'll be looking for selling opportunities towards the downside. Zoom it out. This is a level that we haven't seen very recently. The last time we saw this level again was back in 2020, not that long ago, right? 2020, and you can see that the next key level towards the downside is at 1.14, and also again at about 1.1645. All right, so coming back to the present, if I do sell it down on the H4 time frame, I'll be looking for that trade. I'll show you here. Again, remember to do your own due diligence before you jump into any trades. But I'll be looking for a selling opportunity below 1.1763. So let's say about 1.1745. My stop loss will be about a 30 to 40 pips above that near-term resistance. Take profit would be about 90 pips towards the downside. I'm looking at a 1:2.3 risk-reward ratio towards the downside there on the pound dollar. But we do need to see a stronger US dollar. We do need to see the pound dollar drop and close below this support level to signal that next downward move. Alright, so Diana, I hope you see that. I hope it answers your question there on the pound dollar. With that, anyone else with a request? We have US 30. Fantastic. All right, US 30, clear out the charts. Now, US 30 actually sitting at a very key level now. Why do I say it's a key level? Is because of those points, right? Back in August, we saw it hit, resist, found a bit of a support level there. Right now at that 32.835 level, right? 32.835 level. It looks like it's going to be a key level. If we do see the US dollar strengthen, we could see this push towards the downside. I feel that with the recent move, right, since the 17th, it's been dropping, we could actually see some further downside towards the 32.451 level. right? Short-term downside towards 32,451, but then I think there's going to be a limited downside towards that point before we're going to see a bounce back up. All right, so initial move, I think consolidation at this point before a possible move towards the downside in the short term. All right, you guys are asking Aussie US, US CAD, and gold. That will all come shortly when Jianing takes over. So she's earmarked those. We'll leave that for her. Next one I'll look at, if you haven't any request, is the euro dollar. All right, euro dollar. Euro dollar has been quite crucial because it broke below that parity level. I'm pretty sure I've been checking with you guys. You know, are we going to see it break below parity? It shot down, broke below parity, hit that 99 level, or actually that 0.99 level, and spiked straight back up to test parity again. This was because of that dollar weakness, but right now trading at 0.9946, I would say that could anticipate further downside for the euro dollar. What I would say is that if you are risk taking, then hey, I would be looking to sell down from this point. If you are a bit more risk adverse, then look for it to break below 0.9923 for that downside move again, because this is a 20-year low if I'm not wrong. We could see price levels or price relevance very far away. So if you're looking to sell it down, look for round numbers level, or round number levels at about 0.98 or 0.98 there towards the downside. Okay, so if you're selling, I would say selling opportunity below 0.9923, about a 30-40 pip stop loss, about a 90 pip take profit, or 1:2 risk reward ratio towards the downside there on the euro dollar. Okay, do your own due diligence. We're going to expect a lot of volatility. Even if it does drop, we're going to expect a lot of volatility at this point as it trades lower, because at such a low level, historic low level, we're going to usually see a lot of volatility, as we saw here, right? We saw it bounce, drop significantly, and bounce very strongly. And again, back then when it tested parity, broke parity briefly before spiking up strongly again. So we could see a lot of volatility at that point. Hey Desiree, how are you doing? When you say break below, do you mean the candle needs to close below, or wick would be sufficient but did not close below? Assuming it's a candle close H1 or H4, right? So in this case, let me just take that away. Because I'm looking at an H4 time frame, I would say it needs to close below on an H4 time frame. Okay. For me, I always look to enter when the candle has closed. At least it prevents me from getting caught out in a fake breakout. Right? In a fake break, for example, in this case, right? What would happen? Or it'd be a terrible situation if you did buy, or if you did sell in at that point thinking that it's broken that low level, but then it reverses straight away. So I always look for a close of the candle before I look to sell it down or to buy it up. Next one, Euro Kiwi, right? Euro Kiwi, where is it? There we go. Well, the last time we spoke about Euro Kiwi was back when it was trading at 1.6225. Right now at 1.605453. Key level again 1.6028. Right, we've seen it drop, hit that level, and consolidate. For the Euro Kiwi to drop further, what needs to happen? Either the euro dollar needs to drop further, which is what we're anticipating, or the Kiwi dollar needs to strengthen, right? Which, if you look at the Kiwi dollar now, you can see that it tried to go up, it came back down, it's sitting right at that level now. It looks like we might actually see from this consolidation, if it does break towards the downside, might be limited to that 0.6166 level. So a little bit concerning there. Not much movements on the Kiwi dollar anticipated, but further downside anticipated for the Euro dollar. So looking at the Euro Kiwi, I'm looking for it to consolidate in a tight range between 1.6028, 1.6073, bounce around within here. And if price breaks below that support level, then it brings into play the next support level at 1.5892 or 1.59. Okay, so that's actually a good opportunity if it breaks below. And you can be a bit patient with that because we do have a lot of space for it to drop at about below 1.60. So I would say below 1.60. Okay, about there. Stop loss about 30 to 40 pips. Take profit again about a 90 to 100 pips. A 1:2, 1:2.5 risk reward ratio towards the downside. So if you're looking to buy it up, it could happen, but with anticipating euro weakness, possibly looking for this to drop towards the downside. With that, the US yen. Keep those questions coming. If you have anything else to ask, I'll be happy to guide you through that. With the US yen, all right, it dropped, hit that 135.81 level, bounced back up, consolidating at 136.44 right now. I can tell you that I actually had a trade. I was anticipating this to break lower, but I closed it out just before this call because I wasn't able to pay attention to the trade, right? So that's why I closed it out. So I was looking at this is an H4 time frame. I was looking at that upward channel. I was looking for it to break lower. So I was looking at that. So that candle didn't happen yet. I was looking for it to break past this point to trade towards the downside, towards that 135.32 level. All right, so I was looking for this to break towards the downside, break that diagonal trend line towards the downside towards this point, which had a very good risk to reward as well. I was looking at about a very tight stop, about 30 pips, a good take profit at about 90, a 1:3 towards the downside. I sold it down, knew that I couldn't monitor it, so I held off. I closed it off for a small profit. Then I'll reevaluate after this call to see whether I would be looking to get into this next trade, or is it going to bounce? Is it going to bounce off this level back up towards the 137 level? With Japan looking to open up further very soon, would this mean that the yen could strengthen? Usually we haven't seen much impact for this kind of, those would be what we call fiscal policies. Fiscal policies tend to have not significant impact on the currencies. Normally we see more impact on the from the monetary policy front. All right. So Fabio, I hope I answered your question there on the US yen and also Desiree. Last one for Ari, looking at the Nasdaq. Where is my Nasdaq? There it is. Well, the chart tells you everything you need to know. It is sitting right at that area of the 12,887. Adjust this down a little bit, about 12,864.65 level. No clear directions. I would say that you could actually see why we saw that drop. A bit of a shoulder, head and shoulder pattern causing that drop towards the downside. What we're likely to see is a similar pattern as what we saw here, right? Oops, I don't know why it's extending, but we see that fluctuation around this point. I think we're going to see a similar pattern bouncing around this level, possibly for a medium period of time, because we're looking for that direction from the dollar as well. So no clear move yet, unless towards upside if it breaks above that 13,000 level, and if it breaks towards the downside of 12,775, then we could say that we're possibly ready to look for a selling signal. All right. Hope you answer your question there, Ari. Yes, I'll look for those support and resistance levels for an enter signal. Alrighty. Okay, so just went through a couple of charts very quickly. What I'll do now is I will get Jianing to jump on. I will show you the Aussie, the Kiwi. What else are we looking at? CAD, oil, and gold. Alright, so make sure you smash that like button, click on that subscribe and like button, and here we go. And you can ask questions as well. All right.
Hi guys. Good morning, good evening, and good afternoon. Hello everyone. My name is Jenny, and I'm come from China. So this is my first time to meet you all guys here. Okay, now, hi. Okay, now let's start our analysis. So firstly, let's have a look of the gold. I heard some of you guys are very interested in gold, so now let's take a look of it. So I clear this first. Give me a second to judge my screen. Okay, as you guys can see, because of the strength of the DXY, and the gold is going down in recently, so we can maybe we can have a look of the day chart to have an overview understanding of the market. So from the, as you can see from the day chart, here is a descending trend line. Okay, it's very clear trend line. 1, 2, 3 touch here. So now let's have a look of the 4-hour chart. Okay, so for the 4-hour chart, I think for the short-term trend here is also a very clear descending trend, and even a channel. Maybe we can draw a small channel here. Yes, as you can see here is a very clear channel. So now let's try to find some levels for our buy entry and stop loss and take profit. Let me zoom in. Okay. So as you can see, the price drop from like the 1080 to the lowest at the 1728, right? And here is a small pullback of the price. Okay, but because the price is still going within the descending channel, so from my perspective, I think we can still expect for a buy opportunity. So here we can see is a small wave here. So for me, I like to put the buy entry at this level. Yeah. Oops. Okay. So I like to wait for a wheel for the market. I'd like to put the buy entry at here. Where's buy? Okay. Sell entry. Sorry, the sell entry at here. So if the price breaks this sell entry, maybe we can expect the price to go down in the future. So maybe we can wait for a moment. So if the price breaks this level, I think the next support level could be here. Is our current swing low. So I take this one as the take profit. Okay, however, because we can see the price is almost touched the descending channel of the upper bound. So if the price didn't follow us idea that maybe it will go up in the future, so maybe we can find a resistance level as to take our stop loss. Okay, so for me, you can see the price. I like to put the stop loss like at here. Like here. Okay, you can see the price touches this level for some times, and here is also a swing low here. So I like to take the stop loss here. Okay. And then sometimes I like to use some Fibonacci tools to help me to confirm my idea about my stop loss, sell entry, and take profit. So in this chart, I like to firstly here you can see here is a swing low for the recently, and here is our current swing high. So I'd like to draw a Fibonacci from the swing low to swing high here. Okay, I'd like to leave the 38.2 Fibonacci level here. It's very close to our stop loss. So if the okay, sorry, not for that at the moment. Okay, sorry, that line was wrong. So because that for the 38.2 level here is already broken here. So here I like to put my 61.8 Fibonacci level here. So if the price go from here to here, it may reverse to the level at here. Here is also very close to our take profit. Okay, and then maybe we can use another Fibonacci level from here, the swing high to the swing low. Okay, so we can say the price go drop from here to our swing low here. So if the price want to reverse the current descending trend, it may retracement to this level is 50% and is very close to our stop loss. Okay, so that is my analysis for the gold. So if you have any questions, please let me know. Okay, Swiss franc, Japanese yen, and maybe later. Okay, now let's go for another one. I saw some requests before is the USD Cad. Okay, so let's do USD Cad first and then go for others. How to avoid the false breakout? And so sometimes maybe you will say for a short term, you will say like here is our channel, right? Here's our channel. Maybe when we'll say here is a little breakout, right? So for me, I like if the period is short, maybe I will look for where to see where is the market going to, because if the time is quite short, maybe it's just a free break. It's just test this area, it may go back to the channel later. So maybe for me, I like to wait for a while. Okay, just clear this and then we go for our USD Cad. Okay. Okay, for the USD Cad, we can see for currently here is we can draw a ascending trend line here. So I move it into green. Okay, here is our ascending trend line here, and then we can also use some indicators like the Ichimoku cloud here. You can see the price is still above the Ichimoku cloud, so it may help us to confirm our idea that the price may go up in the future. So as you can see, the price go up for a while and it reversed to our ascending trend line and it then go up for a while. So for me, I like to because the price is like the 1.297, so maybe I will wait for a while for the price to reach our previous swing high here is our buy entry. Okay, so if the price can break this level, and then maybe we can expect the price will go up in the future. So if the price go up, maybe I like to take profit at here is at our current swing high here. But if the price, because you can see the price is like touching the ascending trend line, so maybe it will have a little reverse for the current trend. So I like to put the stop loss right here. Okay, so you can see the price has a lot of touches here. Here is 1, 2, 3, 4, 5. Here is our pullback support level. So I take it as our take profit. Take it as our stop loss. And then cause here is before the short-term ascending trend. Here is our previous swing low here. So I like to highlight this level as our intermediate support line. Okay, here could be our intermediate support line. So if the price reach to this level, it's already break our ascending trend line. Okay, let me have a look. Do you guys have any questions? Okay, so next one, let's move to the USD. Okay. Let me have a look. Crypto maybe later. Let's go for this one first. Oh, so messy here. Let me have a look. Okay. So for the Australian dollar, we can have a look. So for the relatively long term, here could be a ascending trend, but now here is almost like a descending trend line for the relatively short term. You can see here. Maybe we can draw a channel here. Cool. You can see here is a descending channel here, and the price is also below the Ichimoku cloud. It can help us to confirm of our idea the price may go down in the future. So as you can see here, the price was experiencing descending trend, and it have a reverse to our upper bound of the descending channel, and it now is like consolidating at this area, but the price is still within the descending channel. Okay, so now let's try to find some key levels for our analysis. Firstly, I like to put my buy entry at here. Our sell entry at here. Because we can see the price test this area before, and here for the previous hours, the price also test this area. So I'd like to put the sell entry here. If the price breaks this level, we can expect the price go down in the future. So for the next support level, I like to put it here. It's a little bit close, but okay, I think here could be our intermediate support level. Okay, put it at here. Okay, but if the price keep going down, let's see where the price may go down to. Here you can see here is a very significant support level here, but it's quite a bit far away from our entry, right? So for the next 1 day to 1 week, I'd like to put the support level at here. here could be our first support level, and here could be our second support level. Here is a bit far away, so because you can see here is also quite a significant swing low, and is also in line with our previous swing low here. Okay, but if the price break our descending channel, we can try to find a resistance level. So I like to put it here. You can see the price touches this price at 1 and 2 times. So I like to put the stop loss and our first resistance level here. Okay, so that's my analysis for the Australia dollar. So let's move to another one. Sorry.
Kiwi.
Oh. So let's have a look of the Kiwi dollar. Oh, I think Jin has shared some view before for the Kiwi dollar, so I just clean this. Oh, okay. So here you can see the price has a little bit consolidation here, but for the our current trend here, maybe we can also draw a channel here. Okay, it's a valid channel and the price also under the Ichimoku cloud, so we can confirm our idea that the price may go down in the future. So now let's try to find some key levels. As you can see here is a very significant support level, so I put it in our support level here. Okay, it's our current swing low for the few months, right? So if the price going down, it will go down all the way to here. It's our current swing low here. And then before that, maybe we can also highlight some support level to make as a reference. So if you have a look of the chart, maybe you can find this level before, after this very significant support level. Yeah, Kiwi dollar and Australia dollar is quite similar. It have the strong correlation of the two currency. Right. So here you can see also here is also a swing low here, and so I think that could be our first support line, and that one can be our second support line. Sorry, second support line here. Okay, but if the price break out as the Australia dollar, if the price break this descending channel, it may go up to here. Here could be our first resistance, because before the price going down for a small pullback, it almost reaches it's almost break our descending channel. So as I can't remember who asked the question before whether it's a fake breakout. So if you so here could be a little breakout, but if you wait for a while, you can see the price drop again to our descending channel. So maybe we can wait for a while to see where the market going to. So here could be our first resistance level. And then if the price keep going up, I'd like to put the second resistance level here. Here you can see it touches a lot of swing high here, so it could be our second resistance level. 1, 2, 3, 4 touches here. Okay, here is our analysis for the Kiwi dollar. So another one I saw like the Swiss franc, Japanese yen. Let's go for this one. Okay, let's just remove all the joins here. So for the Swiss franc, Japanese yen, maybe you can see a little bit messy for the trend, because you can see the price is almost break the Ichimoku cloud, but it haven't break the until break the Ichimoku cloud. So let's maybe you can have a higher time frame break. Okay, so if you have a look of the higher time frame, you can see here is a very clear ascending trend line or ascending channel. I think a channel could be better. Okay. Oh, sorry. Okay. Anyway. It could be a channel. So give me a while to find a channel for you guys. Okay, you can see here is a channel, but it's a ascending channel, so I need to put it into green. Okay, you can see if you have a look of the higher time frame, you can see here is a very clear ascending channel, and the price is also above the Ichimoku cloud, so we can see the price may go up in the future. So that's why sometimes we suggest you guys to have a look of the higher time frame first to have a overall understanding of the market, and then go to a relatively lower time frame. So for example, you are trading on the 4-hour chart, so maybe you can have a look of the daily chart first to have a general understanding of about the market, and then go back to the 4-hour chart to find our entry level and take profit and stop loss. Okay, so you can see here, although the price is having a small downtrend, but for the long-term trending, the trend is ascending trend. So maybe we can expect the price will still going within this long-term ascending trend. So now let's try to find some our buy entry, because the price is a little bit pulled back here. So I like to put my buy entry here. Yes, you can see in the price and the buy entry is in line with our swing high here, swing high here. So if the price can break out this buy entry, it can confirm of our idea that price may keep in our ascending trend. So if the price break this buy entry, maybe we can set our resistance level. Here is our take profit, here is in line with our swing high. So if you go back, maybe think if you go back, you can find this three swing high is at the same level. So here could be a strong resistance level here, 1 2 3. So here could be our take profit. But if the price didn't go in the ascending trend, it may drop down, right? So if it drop down, I like to put the stop loss at here. Stop loss at here. Okay, then we go for the Australian dollar and Japanese yen. Okay, so okay, I like to put the stop loss here is in line with our here is a swing high, it's very close, and here is the previous swing low. Sorry, the previous swing low. If you go back, you can see it's also touched here. Is a previous swing low here. Okay, so I think that's the analysis for the Swiss franc, Japanese yen, and then we go for our last pair is the Australia dollar and Japanese yen. Japanese yen. Okay. As usual, let's have a look of the daily chart first. Okay, let's have a look of the daily chart. So have a general understanding of the market. So if you like join the trend here, you can see is a ascending trend, and the price is also above the Ichimoku cloud. So the long-term market trend is ascending trend. So then we go back to the 4-hour chart to have a look. Now you can see, although it's a ascending trend in the long term, but we can see here is a breakout of the trend. Here is a very significant breakout, so I like to highlight this level here. Here could be our strong support line. Okay. So because the price is still within the ascending trend and above the Ichimoku cloud on the 4-hour chart, so let's try to find our buy entry. Okay, I'd like to put our buy entry at here. Okay, so if the price here is, think here could, okay, if the here could be some price is testing this level, right? So if the price can break this buy entry, let's try to find our resistance level. So you can see here, here are several swing highs. The price testing this area for a lot of times. You can see a lot of candle here. So here could be a strong resistance level. So I into our first resistance. Okay. And here, if you go back a little bit, and you can see here is a more significant swing hand. So here could be our second resistance level. Okay, now let's go back to our current price. Okay, but if the price is because the price still have some gap between the ascending trend, right? So if the price drop from our current price, maybe we can set our stop loss at here. Is our first support level. Okay, so you can see here is the swing low here, and the price is testing this area for a little bit. So I'd like to put the first support level here, and then here could be our second support level. Okay, here is our short-term significant swing low. So here could be our second support level. I put it into second support level. Okay, I think that is the analysis for the Australia dollar, Japanese yen. So if you have any questions, please let me know. Okay, thanks guys. We still have like 2 minutes, so I like to stop here. You want to share something?
No, I'm fine. So as we come to the end of the session, wait, I don't see myself appearing. All right, no, that's okay. Right, as we come towards the end of the session, I hope you had a good session. I hope you make use of the analysis that we have shared here, and I'm sure you'll see more of Jianing with her analysis as well. So remember, trade well, trade safe. Watch out for the Jackson Hole event. Any takeaways for today? I will be taking away my dinner later. No. Yeah, main takeaway is watch out for the Jackson Hole event. Possibly a high volatility scenario. Could be a non-event, but we're always going to be prepared for high volatility scenario. All right. So take care now. See you again at the next sessions. Your trades are doing better. The fundamental news. I'm glad that it's helping you, and I'm sure it'll help everyone else as well. Alrighty, take care now. Bye bye.
Bye bye.